All right, today I want to share with you just three basic rules when it comes to trading the E-mini S&P 500. Okay, and you can trade this same strategy regardless of the future market that you or contract that you have interest in doing. Now, specifically today, I'm looking at the E-mini S&P 500 with this trading strategy. Again, it is a very easy way of being able to profit and make money, just basically trading from your own home. You do not have to, sit there and spend hours upon hours looking for setups. 1 to 2 hours a day, working from the environment of your home, trading whether it's on your laptop, your desktop. I know a lot of people, they tend to like to trade from their phone when they're mobile or on the go, which I highly don't, me personally, I don't recommend, but to each their own. But for me, I'm trading on the New York session and I'm just doing this or scalping the E-mini S&P 500. And I do have it up still on my charts. I don't have my primary focus on this particular market, but you got to understand, I trade the NASDAQ, which is the E-mini NASDAQ, more so today than I have, but I always have on one chart the E-mini S&P 500 and then on another chart the gold future market. But the strategy is universal, okay? There's just three basic rules that you need to understand. Number one, what direction is the market actually moving in, okay? Has anybody ever told you that allow the trend to be your friend? Meaning, if the market is trending to the upside, look for pullbacks to key areas of supply or demand to trade from. That's basically what it is. And if the market's moving the opposite direction, moving lower and trading that way, then look for key areas of supply. I trade the E-mini S&P 500 using this very simple rule-based 3 steps, okay? Rule 1, figure out the trend, okay? And then from there, what we're looking for, and how do you go about doing that, first and foremost, right? We're looking to see if the market's just making higher highs and higher lows. I like to draw a channel. Sometimes if you have a hard time seeing it, and as long as the market's, trading within that channel to the upside, then I know that I need to be just looking for opportunities to scalp going to the actual upside. So I'm going to erase that right now. So that's all that rule number 1 is. Figure out which way you need to be trading based on the direction. I use higher base charts to start with from top-down analysis. To give me a reason why I like to use the higher charts is to figure out, again, from a broader perspective, what the market is trying to do or what it is actually doing, okay? Then I'll scale down when I'm ready to take my trades. I'll scale down to or move down to a lower entry chart. So like the ES, which is the E-mini S&P 500 futures, I'm using a 60 range chart and a 12 range for my entry. 60 for a higher time frame or higher range chart, and then my 12 range for a smaller, more zoomed in chart to take my entries from. So rule 1, again, if we're making moves to the upside, then look for pullbacks to key areas of, demand, right? So we can see right here, the market took out this high right here. This was a major high right here. That we made prior to pulling back. So we started making these lows, lower highs, lower lows to the downside, breaking a bit of structure here. And then we toppled or took out this high right here above here. So now, again, we're still bullish to the upside. New high, higher low, a new high. It left this area of demand right here. So what is number 2? Number 2, once I've figured out which way I need to actually trade, the second rule is really identifying, did we have a breaker structure where the market took out either, say, a swing high or a swing low. In this case here, because we're bullish to the upside, I'm looking where it's taken out just a recent high that has made a move to the upside and broke structure, okay? So that's all a breaker structure really is to identify if the market is taking out a high or a low as it's swinging in the direction which it's moving in. So rule 2, do we have a breaker structure? Yes. Okay. So again, rule 1, figure out the trend. Rule 2, figure out which way is the market moving. And if we're breaking structure to the upside, rule 2, then we're looking for the market to pull back, in this case here, to a high probability key area of demand. Okay. So rule 2, do we have a breaker structure? All right. And is there a demand area left behind where the market broke structure to the upside? Right here. Okay. So I'll mark this up here on the E-mini S&P 500, and you can trade the same. It doesn't matter if you're trading the micros, okay? You're still trading the index or indices. It's the same thing, okay? The charts may look a little bit different when trading the micro, say ES, or the micro E-mini S&P 500, but still, you're trading the same thing. This strategy is universal, all right? So get that right. Okay, so now that we've marked off our higher range zone, we broke structure above this high here. We already recognize that we're bullish to the upside. We mark off the demand area, we draw it up, and then we just wait patiently for the market to come back to it. So once we break structure right here, and I've got the zone marked off on my higher range chart, what I do then is just move down to a lower range chart. So we have a new high that was created right here, right? Okay, so I'm gonna move down to my 12 range chart. That's that same high right there. That's that larger demand zone that we're looking at the market for the market to retrace back to. So when we start retracing back to it, okay, and that's what I patiently want to do. Part of trading, the most important thing as a trader is being patient and taking good quality setups. All right. I don't know how to stress that, anymore, but that is imperative, very imperative to be patient. Okay, and wait for the setups to unfold for you. Okay, you want to take these nice setups. The market starts retracing back to the zone. Once it taps into the zone, what I'm looking for is two things. Did it, in pulling back to the zone, is there a lower 12 range demand zone that rests on the inside of the larger zone that we marked up on the 100 and not 120, but the 60 range. I'm saying 120 and 24 because that's what I trade on the NASDAQ, the E-mini NASDAQ futures, okay? But for the E-mini S&P 500, when it comes to trading this strategy, what I'm looking for is to see when we're tracing back to the zone we marked up on our higher range chart, the 60 range, taps it, do we have a lower range or 12 range demand zone on the inside? In this case here, we don't. So what I'll do is, this is the third rule. I want to see if we do not have where there is a high probability 12 range demand zone resting on the inside of the larger chart zone, then I want to see where the market starts to break structure back to the upside after it taps into the higher range zone. So it taps the higher range zone. We get some demand or push pressure to the upside with lots of buying. Pull back. Now we got that break of structure. And then I'll wait for the market to pull back to an area on my lower range chart, my 12 range, okay? Meaning a demand zone to look for an opportunity to go long, okay? Break of structure to the upside. We've tapped the higher range zone. We're bullish overall on the higher chart. Taps the zone here. Look for a break of structure to the upside with, nice momentum or bullish opportunity of buying to the upside. Then once it does that and break structure, pull back to this key area of demand. I'm looking to go long, okay? What am I aiming for? I'm really aiming for them to take out the highs right here, okay? Because we broke structure on the higher range and create a whole new high. We pull back to what? A beautiful area of high probability demand on the 60 range. So more likely they're going to fill the gaps back up to the supply zone. Maybe react there, but then this is where you can take most of your contracts off and then maybe leave like one as a runner and see if you can also capitalize or take a maximum profit or payout as far as see if it can clear that high right there. Okay, so we're aiming for the highs just as well. Stop loss is always going to go on the back end. Wherever the market reacts at and rejects the zone, on this case here off of our lower range chart, below this area here at 67.60, I always give myself 3 or 4 points room below the rejection point, because sometimes they'll push up and then come back because the market likes to move in ebbs and flows. They'll push up, come back, and test this area right there. So I like to put my stop loss below that area, but again, I'm aiming for the high of what was created off of the higher range chart. Simple strategy, guys. Just 3 rules. Figure out 1, the trend of the market. 2, do you have a nice break of structure that is moving with the flow of the market and it leaves behind a valid high probability zone? And then 3, you're scaling down to a lower range chart to find a nice demand setup that's created on the lower range chart once it taps in or enters into rejects off of the higher range demand zone or supply zone that you mark up. Okay, this is the same strategy that I talk about each and every day when it comes to trading futures. In this case here, I'm showing it here on the E-mini S&P 500, but the trading strategy is universal. You can trade it no matter the market or asset class that you are interested in actually trading, because supply and demand is universal. Now, if you want more insight information surrounding the strategy, because there's nothing complex about it, we have people that are trading on our on the Discord each and every day. First and foremost, the Discord link is the first one down in the description. Now, I also go well above this when it comes to the strategy as a whole. there is a private community or program or membership program, which is very, very, very inexpensive. Guys, I'm here to not, I'm not here to get into anybody's pockets and start charging hundreds or thousands of dollars for a program or course, because I don't have a course to sell, okay? I don't have a mentorship. I just simply provide video content that I feel has been helping and will continue to help individuals out there as long as they put the time in to watch the video content. They spend time on the charts, back testing and forward testing, but I can't guarantee anything because everyone's outlook and everyone is different. Everyone's psychology is different. Everything from trade management to risk management to how they perceive and have their own perspective of reading the charts. It's different, but I try my best to discuss the way that I actually trade, and we have people that are successful trading the same or similar way over on the Discord. Plenty of them have passed evaluations that they're taking with these prop firms, and there's a testimonial channel on the server to where it's all laid out, and you can see people, basically leaving their own testimonials in reference to, using the strategy and stating how it works for them or has worked for them, okay? But what I'm trying to get at is that it's a private community, and you may want to become either an elite or an ultra elite supporter of that community, because basically what you're doing is supporting the efforts of the channel, okay? That's all it is. Very, very, very inexpensive, but what you receive is so valuable, because that's where I really go into detail about the blueprint, the cornerstone, the strategy as a whole, walking you through setup after setup after setup, unfolding structure, price action, talking to you about profit target areas, stop loss, strategies, and where to place your stop loss at, things of that nature. Plus, you also get the video playlist and a great video that I cover surrounding market structure for anyone that struggles with that. You may want to become an elite supporter of the channel. That's what you receive, okay? For just pennies on the dollar a day. I'm serious when I say that. And I'm going to talk a minute about the link and where it's at. Once you click on it, you can see for yourself. But you can also take it one tier up and become an ultra elite, where you receive everything I just discussed, plus my live recorded trading sessions as well. Now, that link is down in the description portion of the video. It's titled Ultra Elite Supporter. Once you click on it, you'll see 3 tiers that will pop up. Make sure to choose either the second tier to become an elite supporter or the third tier to become an ultra elite supporter. You'll see the price for each tier, but it also lay out the perks and rewards that you receive for each tier. Again, like I said, it's very inexpensive, pennies on the dollar a day, and it's been very valuable to lots of people, okay? Now, last but not least, if you have not taken the time to subscribe to the channel, please make sure to do so by clicking that sub button and click the bell as soon as you click the subscribe button, so you turn on your post notifications and do not miss any of the uploaded content in which I post or when I post videos, okay? Outside of that, that's all I have. I appreciate it if everyone right now, if you haven't already done so, click the thumbs up, the like button if you found value in today's video. Appreciate it. Take care. I'll see you in the next one.